Can you share any specific strategies for optimizing the timing of the inflow and outflows to avoid those cash shortfalls?
Yeah, because I think first it's acknowledging often we have clients come to us and say, hey, listen, I'm looking at my P&L or my accountant's telling me I'm profitable, but I still am struggling with the cash in the bank and feeling stress around time to make payroll or pay vendors or subcontractors, whatever it is.
Welcome back to my channel where we dive into the world of construction finance, project management, and everything in between, really. Today, we've got a very exciting episode lined up that's going to provide a lot of value when it comes to cash flow strategies and financial metrics. So, I am sitting down today with Lauren Furtado, a CFO focusing on growth strategies for business owners. Lauren, thank you for joining me today. I'm excited to chat.
Thank you for having me.
All right. So before we dive into the nitty gritty parts of it, I would love for you to give us a little quick overview of your background and how you got started in construction.
Yeah, absolutely. So I am a fractional CFO. I serve who I like to call my blue collar businesses, which, as you know by the name, I can't stay away from anything in construction and the trades, service based industries as well. My background is a traditional accounting route. I worked for a big four public accounting firm for 19 years. I spent a lot of that time looking at financial statements and looking at business processes. So for me, I was really craving being able to serve people that would find ton of value in my experience. So for me, I was looking to do something for small business, and I knew I wanted it to be in this space. And I think there is such a need within blue collar businesses and in construction for financial advice that's sound. And the name of my firm is called Unconventional CFO, and I take pride in the generation of that because I think for a lot of people in the world of accounting, it can still feel very complicated when you're unsure of what some of the acronyms stand for, or you may have had a bad experience with an accountant who may have talked down to you because you didn't understand what they were talking about. So I really pride myself in the fact that we explain the concepts in a way that is much more digestible for people to understand, because most of the guys who work in the construction industry, even if they are business owners at this point, typically their stories are they came through the trades. They're not accountants. So I'd like to at least make their finances feel way more manageable, and being able to help them get to their goals.
Yeah, I agree. I mean, after all, they went into the business because they were passionate about building and,
Yep.
fixing and creating something, not to be, trying to figure out how QuickBooks works and what in the world KPI stands for. I know that many people probably hear KPI and they're like, oh, okay, never mind. I've got a million other things lined up this way. Whatever this stuff is, I don't even want to think about it. So
Yeah, the last place guys who want to work with their hands want to be are in spreadsheets.
exactly. Well, also as a bookkeeper working with only construction businesses, I often see how critical those KPIs and the cash flow and profit margins are. And it's not just like, for example, cash flow, it's not just about having money in the bank, it's also
Mhm.
about the timing of it, the planning, and knowing where every single dollar is going. Yet it seems like there's so much that business owners either overlook or simply
Mhm.
don't know when it comes to cash flow and their financial health. So I am very curious. Can you share any specific strategies for optimizing the timing of the inflow and outflows to avoid those cash shortfalls?
Yeah, because I think first it's acknowledging often we have clients come to us and say, hey, listen, I'm looking at my P&L or my accountant's telling me I'm profitable, but I still am struggling with the cash in the bank, and feeling stress around time to make payroll or pay vendors or subcontractors, whatever it is. So I think it's being able for them to understand first, like the difference between profit and cash flow and why we have differences in those two metrics. Because I think so often they think, oh, I have profit, like I paid taxes. Guys, like I don't understand where's my cash, right? So to your point, timing is everything. And if you are not spending time reviewing your forecast and actually putting into the forecast when payments are happening, you are going to struggle to change that situation. Often I have seen business owners making decisions. They log on to their app of the bank and say, I've got money. I can buy this truck. I can buy this inventory. I can hire this person. And a lot of that sometimes coming down to luck, because then all of a sudden, they didn't realize next week they have an annual insurance payment due, right? So I think it's being able to do a projection with them where they can clearly see the inflows and outflows so you can make decisions of when to do the hire, of when to buy the equipment. So it's really them seeing the picture of what that forecast looks like, because in a forecast, it simply is just a projection over a specified period of time of what your cash inflows and outflows are going to be. And something, just a quick example of like AR, I can invoice all day and recognize sales, but until I have the cash in the bank, I cannot spend that money on something else, right? So it's just that appreciation for what that truly looks like so you can start to do some decision making. And I mentioned AR, that's one of the levers that we typically look at is what are our terms with our customers? Should we be getting paid like upon receipt of invoice? Should we be getting paid up front? Typically I encourage discounting if we're going to get early payments, right? Is there a way to negotiate with current customers your terms and be able to shorten that cycle between invoice and actual cash collection? Because it just gives you the ability to spend that money in a different way and not have to wait for it. That's one. Inventory, I mentioned, just making sure there's a good inventory management system where you can clearly make purchases in a way that's thoughtful and again aligns with when you're going to have cash inflows. Bad inventory management, unfortunately, has been the culprit of some opportunity to improve cash flows in the past. Accounts payable, right? So on the other end of the AR spectrum is the AP. Is there a way to negotiate with vendors? Let's say I had an annual insurance payment. Typically, I was paying once a year. Can I negotiate with the provider and say, can I pay twice a year or each month, right? So it's trying to determine like what you really need to change in order to make decisions. The other thing, which I don't think people are always focused on, is making sure that you build your cash reserves enough that if something happens, you have enough cash that you don't have to like fire all your guys, right? So making sure you've got some contingencies built in and you're building your cash reserves over time to cover a certain amount of months of expenses so that when things happen, you're prepared. You've got cash in the bank. You're not scrambling to then do negotiations with customers or vendors or manage your inventory differently or sell some of it, or right, like scrambling on the back end is never a position you want to be in. So planning is the key. Looking at the forecast, updating the forecast, and trying to determine like which pieces can you tactically move.
Yeah, forecasting is important, but at the same time, if you think about it, when we talk to the guys about forecasting, they don't even know where to start. Like, how do I build out the forecast? Like, what am I looking at? What tools am I using? What advice can you give them?
Yeah, so bare minimum, item number one is good bookkeeping. You cannot do an accurate forecast if you are not understanding where you have been. You have to connect the dots on where you've been to where you're going in order to meet your goals. You cannot change your habits. You cannot do a forecast if you don't have accurate books and records. So that is the bare minimum. And I know that's music to your ears as a
Mhm.
bookkeeper, but like to me, you got to have clean books, because there's no way for us to understand like truly what the numbers are on a go forward if we've done zero reflection on where we have been.
Yeah, if
So
you
that's
think
number one.
about it, it's like, what is my budget for my groceries, right? Simple
Mhm.
things. Well, how much did you spend last month? Can you go lower on it if you need to?
Yeah.
If you can't look at the past data, there's absolutely zero, because every single company is different. So they
Yep.
have absolutely different costs for insurance, for marketing, for
Mhm.
rent, and it's, you can't just say this is the standard, this is what you're supposed to be spending. You have to check your data, historical data, to get something. Yeah.
Yeah, absolutely. And I think that exercise of doing some industry analysis is important in terms of just gauging like, are we super far off? And a lot of that I would say is in like pricing discussions and profit, looking at profit, right? If your profit margins are totally off from what you'd expect an industry standard, there may be a reason why. I was having a conversation with someone last week about the fact that, you've got people who maybe want to source everything here in the US. So maybe their materials are more expensive, right? Versus someone who might
Mm.
buy materials from offshore, right? That typically come at a cheaper cost. So like you could be off from industry, but I think it is absolutely a good data point, but it is not going to be the tool that you use to build out your cash flow for your business, because to your point, everything is going to be unique and each component has to be based on some level of what you've done in the past. So I'd say that's number one, is good books. Number two is a good tool. I have a free cash flow forecast template I'm happy to provide the link to that you can include with this episode. But to be honest, you can get the information anywhere. If you Google like a forecast spreadsheet and you have the ability to build that out, you can. But I think the problem is when you've got a template and you think you can DIY, just like DIY bookkeeping, you're going to run into issues when you don't have the expertise. The biggest thing with forecasting is one, accountability, and two, some level of advice, someone else looking at it to give perspectives. Because when, let's say, I own my business on my own and I don't have someone to partner with and make decisions with, I am going to look at that without any outside perspective. I'm going to make decisions based on the information I have of what we've done. But like having an advisor come in and say, this is what I've seen in industry. Have you looked at these costs? Having perspectives of, what you could be missing. Maybe there's insurance missing and like you didn't have it on the books and maybe you have it, but like we're paying it through something else. So like even identifying like either errors in your bookkeeping or just opportunities, having an outside point of view is usually the way to go to like best utilize your forecast and make decisions.
Yeah, that's a good advice. So going back to terms that you mentioned, my favorite thing about cash flow is to, like you said, late payments, there's a
Mhm.
penalty, early payments, you'll get discount maybe a little bit. But the third one I love is deposits.
Sure.
And we know in construction, a lot of times we're dealing with the banks. So my clients oftentimes they're like, I can't get a deposit. I have to spend money before I get paid. So, and also there's also situations where there's slow season, right? Where
Sure.
cash inflow is very hard to come by. For these couple situations, what advice would you give in terms of cash flow management?
Yeah, so I think if you're feeling like your arms are a bit tied in the circumstances, whether it's deposits or seasonality in the business, where again, the inflows just aren't the same as they are in other parts of the year, it's just knowing that, right? So it's knowing that and being able to plan proactively. So when you have a true picture of what the ins and outflows and when those are going to be, you can change your spending habits, right? Okay, so I know this money isn't going to come till then. What can I do to cover that, right? When you have the full picture of doing the forecast, it's not just like this one job, right? You're going to look at all of your jobs. You're going to see the entire picture of your company and when the ins and outflows happen. So you can better time other transactions. It's about the correlation of the stuff between the two. And especially with seasonality, I always push to really bifurcate out your costs, right? Your fixed costs that you're going to have to incur even in the slower seasons versus things that are variable, right? So what are the things that we can potentially turn down during the slower months? And what's the, again, minimum for the fixed cost of cash we need in the bank to be able to pay those bills and survive through that slower time?
Yeah, that makes sense. Okay. Is there any sort of tools that you recommend that would help people with cash flow management? I mean, I know that as simple as you can go is Excel spreadsheet, which I know a lot of my clients are using. They're just comfortable because they can see kind of breakdown of what they forecasted versus what they're spending, if we want to track it on a weekly, monthly basis. But maybe there are some good tools out there that could help.
Yeah, and you can go the extremes, right? To your point, you can do something as simple as a spreadsheet. To be honest, I work on eight-figure clients, and we use a Google sheet, and we
Hmm.
keep it at. Or you can go the other end, right? Of getting some IT solution, and maybe there's a function of tracking budgeting and all the integrations, right? My only advice is use the tool you're actually going to use, right? So if you're going to invest money, bring in an IT solution and have something very detailed, or maybe there's an app on your phone that's showing you, right? And like it's getting updated real time. If that's what you're going to use, then do it. Whatever is going to keep you accountable, whatever tool you're going to use is the one that you should. It doesn't have to be complicated. It doesn't have to be a big investment. And what I like about something as simple as a Google Sheet is we can see when we change one number what happens and we can change it back, right? Like there's not all this having to revert back to previous versions or, multiple people having access to it. For us, typically the forecast lives with the CEO and the CFO as well, and maybe limited people on the team. It's the tool to make executive level decisions, right? And how that trickles down to budgeting, we can strategize. But to be honest, that's like the hey, Are we getting to the goals? How are we moving with this? It's not the dollars and cents. It's not the little transactions we're worried about. It's the high level strategy stuff where, again, as a CEO, if you're trying to make strategic decisions, that's the tool to do it.
Mhm. How does the management of cash flow differ between like a small scale contractors and the large construction companies? Maybe something smaller startup companies can learn from the large one.
Yeah. To be honest, not by much. Now, the underlying information behind that might be very different, right? Even when you look at job costing, right? If you've got a smaller shop that's only doing a couple jobs at a time versus just volume, right? Like the underlying stuff under that may look a little different, but at the surface level, it's all the same. And it's funny because as you were talking, I was thinking back to even my days in public accounting where I was serving giant corporations. I mean, multi-billion-dollar companies. They look at the same information too, right? It's
Mhm.
not overly complex whether you're just starting your own business and you're by yourself and you've got no cash in the bank versus, multi-billion-dollar companies. It's again different underlying information behind it, but it's the same metrics. It's kind of the same format. So it really doesn't differ that significantly.
Interesting. So it's all about staying consistent, improving your numbers. Okay. So now let's shift gears a little bit and
Mhm.
talk about financial metrics. So a lot of people I know focus on revenue and profits. I know with my clients, we always look at their markup, gross profit, net profit, what we can change. But I know from my own experience also that there are a lot of other metrics that can paint a much clearer pictures of the company health. So what are the most critical ones that you think construction business owners oftentimes overlook but should
Yeah.
really track?
Yeah, so to be honest, it really isn't overly complicated KPIs because I think the more financial data you look at, the more paralyzed as a business owner you're going to be. So it's keeping it simple, keeping it again to the critical ones that are important. And there's really four of them, and you mentioned most of them, right? So it's revenue, it's gross profit, it's net profit. But you got to make sure you're looking at your operating expenses. Sometimes people don't want to spend a ton of time on that. They think like those costs are somewhat fixed, right? Like I can't do anything about the rent. There's still opportunity to improve your costs even in the operating expense space, or what is referred to as overhead rate. That I think it's reviewing that piece as well. Because once then you get to your net profit, you can determine if you've got to implement tax strategies and things like that, right? Figure out what your owner distribution. That is one thing we spend a lot of time on is like how much pay can I take from my business? And they struggle quite a bit to get to that. And it's again, if you're not reviewing that net profit number, you're never going to be able to truly make an informed decision about how much you can take home to your family. And then the last is cash. And we talked about what that means, right? That's cash flow. It's not just cash in the bank at some point in time. It's really spending time on your projection. Now, to your point, there are other KPIs. Besides those four, which are the four we review with all of our clients on a consistent basis, there are times where we are looking at other KPIs. And I say that in the context of in the world of fractional CFO and the way we deliver to clients, we are very grounded in the goals of the owner. So if there is a specific goal that isn't necessarily measured in those four things, let's say it's a marketing campaign and we want to see what the returns are on that. Maybe that's a KPI we monitor for the duration of the campaign. Let's say it's for 6 months, right? So if we've got specific goals that are relevant at that point in time, we can build out and review those KPIs until we get to the point where we feel like we're actually making traction on meeting a goal or making a decision. Otherwise, we stick to the critical four.
Okay. Simple as the king.
Yes.
My other question was, so I work with a lot of clients from trades to
Mhm.
remodeling companies, landscaping to builders, developers. And my struggle with the builders every time is kind of finding the balance between the profit margins and
Mhm.
maintaining competitive pricing because you can go and say, okay, this remodel is going to be 10,000. I'm going to put, 100% markup on it so I get 50% profit margin.
Mhm.
Um, and it doesn't seem that bad, you would just charge 20,000 to the customer. But when you tell a home builder to mark up, a $300,000 house a little bit higher than 15-20% markup, which is hardly anything, they of course tell you that it's impossible, I will
Mhm.
never get any business. Do you have any advice for that?
Yeah, I think unfortunately, right, when you operate in a space where competition is rampant, you really have to sit there and analyze your costs, like how much, and you don't want to, I want to be clear, like you still want to deliver quality, right? Like your reputation stands on that. But if you don't have a ton of opportunity, then you're going to really have to look at cost cutting measures. At the end of the day, though, if you've built reputation enough that, an increase, which doesn't feel significant to you and I looking at the numbers, test it out, see what happens. I think sometimes too, like that openness, it's just based on their perception of it. And I do think there is sometimes a generational gap of like, this is the way we've always done things. I'm not willing to change
Mhm.
that, right? I think like opening their eyes to maybe even other scenarios where you've seen it work, or have a conversation with even others in the market of like, is this true or not? I think it's checking their perception of it, seeing if they're willing to test it out a little bit. And then again, like if at the end of the day, the answer is no on being able to increase prices, like you have to look at the cost cutting measures. Otherwise, if you're not going to be profitable, you're going to be out of business very quickly. So if you're
Mhm.
not willing to take a chance, see what happens, you're not going to make any money.
Yeah, unfortunately, that's just how it goes. Numbers don't lie, and you're either make it or your overhead is going to eat you up. I was in a situation where I realized that the new builders that hired me to do their bookkeeping, when we looked at the numbers and they were charging 15% markup, and we realized that their overhead is already at like 18%. I'm like, guys, that's why you are
Nope.
not making any money. And then what we realized is that they haven't had sales skills yet. So they
Hmm.
were very much hesitant to raise their prices, even though they were doing fantastic job.
Yeah.
Beautiful houses, such a quality work. They paid their people really good. So the labor was great,
Yeah.
but they were just not sure how to explain the customer the value that they're bringing in. So then after I kind of advised them to try to hone on their sales skills, they went out with a 35% to try it. And he came back and he was like, we submitted 4 bids and nobody even questioned it. And they were
Look at that.
so mad at them. So he's like, I'm so mad at myself. I haven't done it, all this time. I could have been making good money. Um,
Yeah, but it's
just the
good
thing.
that you went through that process, right? Because to check that perception and actually dig a little as to like
Mm,
why do you have that perception, right? Some of that like the mindset block behind increasing the price
yeah.
was based on something they had in their control, like training their people, right? Or again, like bringing in a salesperson, maybe externally to do a session with them, whatever it is, read a book, do the things, right? So like something that is under your control. That's why like pulling back the layers on the why is important.
Mhm. Well, that has been a great conversation. I know a lot of people will get a lot of value out of that. Before we wrap up, do you have any sort of final thoughts or advice for construction business owners looking to improve their financial health?
Yeah, I think it's again, be consistent, make yourself accountable, whether you need outside help to do that or not. It's just making sure look at your numbers. I will say my like favorite client has something called like cash flow Thursdays where he on his own will look at his cash flow forecast, update it, and have a process. Review your numbers. There's so much opportunity because I do think when I go into a new client and I see how well they're doing without these processes, it blows my mind. Because like you guys have no idea how much power you have once you look at your numbers combined with the talent of like delivering quality work. Like your growth can be exponential, and we've seen it time after time.
Yeah, I agree. You got to look at your numbers, you got to track them, you got to understand and have a pulse on your finances every week, every month. That's the only way to make decisions. Well, thank you
Absolutely.
so much, Lauren, for sharing your expertise today. I will link all of your information in
Yes.
the description so people can get a hold of you if they need some help. It's been very insightful. So, if you enjoyed today's episode, make sure to subscribe or leave us questions, reviews, share with your colleagues in the industry. Maybe they need that advice. And stay tuned for more videos packed with actionable insights to help your business thrive.